Hello, everyone, and welcome to Wescott's update on cryptocurrency. My name's Carrie Delgott, and I'm the Chief Operating Officer for Wescott. I'm pleased to be here with Mark McCarron, our Chief Investment Officer. Welcome, Mark.
Happy to be here.
Mark, as you know, cryptocurrencies such as Bitcoin have been a growing subject of interest and debate, particularly over the last year. So let's start out today by level setting on some of the more popular cryptocurrencies available, such as Bitcoin, Ether, and Dogecoin. So today, as you'll see on our agenda, we're going to cover an introduction, some vocabulary, and the growing interest in cryptocurrency, and then maybe focus in towards the end on Wescott's viewpoint.
Great. Yeah, thanks, Carrie. And there is quite a lot of vocabulary here, but first and foremost, cryptocurrencies are virtual or digital money that take the form of tokens or coins. And some examples of those are Bitcoin, Ether or Ethereum, Cardano, Litecoin, Dogecoin. In fact, there's quite a few out there. And the word crypto refers to the way that these coins are created. Unlike traditional currencies that are created by US governments, cryptocurrencies are what's called mined, which is really the process of making computers do very complex mathematical calculations that confirm a transaction using Bitcoin, and that's what creates yet another Bitcoin and adds it to the chain. And that's what blockchain is. And so the blockchain is really a shared public ledger or a system of record that calculates and keeps all these historical Bitcoin transactions in chronological order so that you can tell what's been done in the past and there's a record of it. And so, again, unlike traditional currencies like the dollar or the pound, no one government controls these cryptocurrencies, and that's really the point. And in a sense, it's the creators designed them to be free from that government control, and that's part of their appeal. So while Bitcoin and Ether are by far two of the largest and most recognized cryptocurrencies out there, they're two of over 4,000 coins being created today as of January of this year. And it seems like new ones are being created almost every day.
Yeah, definitely a significant amount of interest in this space, given it is changing quite significantly. As I mentioned earlier, that interest has really spiked over the last 18 months. So specific to Bitcoin, approximately 100 million wallets exist, but most of these accounts are relatively small, and many with just one coin. So really said another way, statistics continue to show that few wealthy individuals hold a stake in Bitcoin. What is the driver of interest for these smaller portfolios? And do you expect the trend to catch on with the more traditional and mainstream investors?
Yeah, despite the excitement surrounding Bitcoin today and over the last year, I think we're still in early days. Bitcoin was initially launched back in 2009, and it remained under the radar, as you can tell from this chart, from that point all the way up until recently, 2017, where there was a spike above 20,000. And that sort of rose above the radar, onto the radar a little bit, and got people's attention, investors and speculators. But then quickly crashed from 20,000 back down to close to 5,000. And that shook a lot of people out of the market. Well, this spike is clearly larger and more significant. And so why is that? I think for a couple of reasons. The first is that there's more mainstream interest. Banks, digital payment companies like PayPal, even Tesla have identified it as a true form of payment. And now I think that's what's driven it to over 5,000 equivalent US dollars, which is shown here on this chart. The problem is that the volatility of the price of Bitcoin, still makes it hard to hold in a portfolio. So will it become a part of a portfolio? It's very difficult to see. The other challenge is that more traditional investors, they tend to want to evaluate an investment based on future cash flows, whether it be income or dividends. And Bitcoin and other cryptocurrencies don't generate income like other currencies, and even like gold. In fact, there's been some discussion about Bitcoin as being a form of digital gold. And maybe that's the justification for putting it in the portfolio. But interestingly, research shows that the gold standard way back when was abandoned because it was unstable, naturally unstable. And the same may be true with a payment system built around a single cryptocurrency like Bitcoin. So the other thing I would highlight, and this is research that bank credit analysts highlights, is that the U.S. government, the U.S. Financial monetary overseers basically feel like this is potentially a threat, obviously, to currency stability. And at the same time, governments make a lot of money when they print and create traditional currencies like the US dollar. And so right now it's small. Bitcoin is really, as you mentioned, a small part of the financial ecosystem, but it is growing. And I think it needs to be a little more stable and clear as to what it could be used for larger institutional players to get more involved.
Yeah, it's interesting. While cryptocurrencies, lack history, it certainly is an innovative example of yet another investment opportunity packaged in a very different structure. So, for some investors, the thrill of this type of speculative investment will be appealing. But for those who are uncomfortable with the theoretical instability, it really might not be a good fit. I'm sure some of our clients are interested in knowing if Bitcoin should be a part of their portfolio. What's Wescott's position on this type of investment?
Well, I think you raise a lot of good points. Currently we don't see Bitcoin or other cryptocurrencies as an investable asset class per se. Again, due to the volatility of the prices, the lack of the cash flow associated with them, and as you just mentioned, the speculative nature of it. There's clearly a growing interest in virtual currency, and we're going to be continuing to monitor that as it goes. And we're in early days. Still a lot can change going forward. But I would also say that while Wescott doesn't, invest directly in cryptocurrencies, there's quite a lot of indirect exposure already in client portfolios. For example, the demand for computer equipment like servers and microchips have really powered the growth of the cryptocurrency world. And those companies are some of the largest in the world. Advanced Micro Devices, for example, Applied Materials, ASML, all of which are held in client portfolios, in this case through the Invesco QQQ position that we held. But they supply the needed technology and computing hardware to make and create the cryptocurrency. And their performance has been very, very strong because of it. The second thing I would say is, companies like ASML, which is a Dutch manufacturer, and Tesla have highlighted the fact that they've invested in Bitcoin themselves. They hold it on their balance sheet. So as a shareholder of those companies, our clients are also getting an indirect hold of Bitcoin. That could go really well when prices go as high as they are today. But it comes the other way too, right? There's risk if Bitcoin prices fall back. The fact is that if it takes a lot of money and effort to mine these cryptocurrencies, and the lower the price, the less incentive there is for that mining to occur. And that could dry up the market and therefore impact earnings. So there's a lot here. I think we're still in early days, a lot of volatility in this market. you don't get a lot of cash generating, assets here. It's hard to value them. That's why they're very speculative. But we do have some exposure in client portfolios already in an indirect way, and that's really important.
Thanks, Mark. I'm sure many of our investors don't realize that indirect exposure. This was really a great foundational overview of a very complex topic, but certainly one of growing interest. If you'd like to learn more about what we discussed today, please feel free to reach out to Mark or your advisor. Thank you.
Thank you.